don't know. I mean, holding a highly volatile asset, Bitcoin is that. It's a digital, scarce, I would even say speculative store of value. To hold appropriate capital, if it's on a bank's balance sheet, would seem to fit into the remit that we've had in the past, that there'd be appropriate shock absorbers against the potential loss, but I haven't seen that specific release.
Final quick question about crypto, and then I want to turn to another subject at the end. Basic question is, if these cryptocurrencies, tokens, were subject to regulation, investor protection, is this basic process of money outside of banks and mediation good for the United States? Is this an aspect of financial development, financial engineering that over the long run will be beneficial for us as an economy, beneficial for investors, or does it give you basic worries?
So, and I've said this in the classroom, and I've said it to my colleagues around the globe in the official sector. I think it's been a catalyst for change. Nakamoto-san's innovation, not only Bitcoin as the first sort of one, but this whole distributed ledger technology has been a catalyst for change that around the globe, central banks and the private sector are looking at how we can enhance our payment systems, and enhancing our payment systems to make them 24 hours a day, 7 days a week, real time at lower cost. And so there's some competition right now going on there. I also think it's raising new and interesting innovations around how exchanges work and how even potentially some forms of decentralized lending. We've had peer-to-peer lending for 15, 20 years. We've experimented with it. This is a new type of experiment. So those, I think, are really interesting innovations challenging the established business models. On the other hand, I would say I don't think it is a good idea to wait until there's a spill in aisle 3 and we hear in the loudspeakers overhead from the Washington Post and your competitors, clean up in aisle 3, and then those of us in the official sector have to rush in, and we've got congressional hearings, and we're sort of like, well, why wasn't anybody worried there was going to be a need for us, clean up in aisle 3? And I think at $2 trillion, 5,000 or 6,000 projects, that it would be better to be inside investor, consumer protection, inside the tax compliance and anti-money laundering and financial stability. Now, if we don't do anything and there's never a spill in aisle 3, great. But I think history tells us private forms of money don't last long. History tells us that investment contracts outside an investment protection remit, people get hurt. That if we have lending platforms that are outside either the securities perimeter or banking perimeter, that usually they get excess leverage and we have financial stability issues. These stable coins are acting almost like poker chips at the casino right now. So add to the Wild West analogy. I mean, we've got a lot of casinos here in the Wild West, and the poker chip is these stable coins, at the casino gaming tables. And so I think there's just a lot of kind of warning signs and flashing lights that we might have a spill in aisle 3, and I'd rather get ahead of it.
So that's a clear and ambitious agenda. Quick last question. You said recently that you're close to publishing an SEC report on the GameStop trading saga. How soon can we expect that? And can you give us any sense of how detailed that will be and where it will take us?
Well, I don't want to get ahead of my fellow commissioners. I'm honored to be chair of a 5-member commission, and as I think I said last week, it's in front of my commissioners now, but pretty soon. A lot of the details are already out, so maybe I'm lowering expectations a little bit because organizations like the Washington Post and others have written extensively on the events in January.
So I want to thank Chair Gary Gensler for a fascinating discussion of one of the hottest topics in global finance. You've really given us I think, clear view of what's on your plate, what you're thinking about doing. Thanks for joining us.
Thank you so much, David. Thank you all for listening.
So please come back to Washington Post Live. If you want to see what we've got coming up in terms of programming, go to WashingtonPostLive.com to register for our future sessions. Thank you for joining us today for this very interesting discussion of something on the cutting edge of finance.
All right. Well, that was fun. Let me give you my take real fast, and then we'll wrap. Good to see everybody. Thanks for joining the last minute here. I didn't think about going live until I was like, this is going to have a big potential reverberation in the market. That was a whole lot of kind of what we expected. Gary was fairly measured in his remarks. He said a lot of the talking points we've been hearing as far as I'm concerned. And now I know that my computer hates streaming video with Chrome as well. I don't know what's up with that, but all right, no problem, guys. Nothing super helpful that I gathered. Yeah, it was the same talking points we've heard him say in the releases and in media response snippets, but it's not anything too terribly new. I think if he goes forth and does his stated goals of going after the bad guys that are conning people, then we'll all be better off for it, because that'll be less money going to wasted cases. I do think it also strengthens the case for Bitcoin. He kind of spoke almost favorably of Bitcoin and unfavorably of some of these other things going on and stable coins. I don't know what they plan to do about stable coins. This whole the chips at the casino analogy was probably the most interesting thing from the whole thing. Was his take that I think that's a reference to that the stable coins aren't technically worth anything, and that they could be manipulated. And just like at a casino, you want to your chip is supposed to be worth $5,000, but you go to cash out and something's going on, and you may not get your $5,000. I don't know if that's what he was. Yeah, you're right. The only stable coin I feel good with is Gemini USD. I'll be honest. I don't. If I have any funds, if I'm in Tether, I'm in Tether for seconds or minutes. Like I'm on KuCoin, so they use Tether. So as soon as I take profits in a Tether, it immediately gets converted into USDC at least. And then if I'm gonna hang on to it for more than a couple of days to trade, if I'm gonna be actively trading with it in a few days, I send it over to Gemini and I convert it back to Gemini USD, and I just park it on there. That's where my stable coins get parked, because I do not at all feel comfortable holding any stable coin other than that one's at least regulated, and technically I think they're FDIC insured. I don't really know how much that gives me the warm and fuzzies, but nonetheless, they're regulated by at least that New York trust. So that's, to me, the only one I'll hold for more than a couple of days. All right, guys. Yes, PAX is good too. Very, very much. DAI, yeah, I don't hold DAI. MC DAI, any of those. I don't mess around with stable coins. So I get the analogy there. Any rapid conclusion? He described alts like a casino and BTC as a speculator's store of value. Yeah, I think he was very complimentary of Bitcoin. I think his comments are actually only going to help Bitcoin. He confirmed what we all say about Bitcoin, and it is speculative because we don't know exactly how the market's going to shake out tomorrow, right? As far as what it's going to be used for and everything else. However, it is a form of a store of value. So he did confirm that it's a digital store of value. It's the store of value and currency of the internet, and it's the cryptocurrency reserve asset. So that's what it's got going for it: cryptocurrency reserve asset, magic internet money. And it does have a real adoption. It is used as a currency in some places, and especially on the internet, it can be. USDC is okay. That's, like I said, that's what I use. If I'm ever find myself taking profits in Tether, I'm in Tether for minutes at most before I flip it to USDC. And of course, if I'm actively trading, it'll stay in Tether. It's fine. Or I'm not going to mess with trying to get the USDC and back. But if the basic account I have to trade off of is Tether, if I'm actively trading. But once I'm done trading, especially if I'm done for the day and I'm going to bed, it gets flipped to USDC. And then the next morning, I'll flip it back to USDT if I'm going to trade again. And that's how I do it for myself. Now, most of the time, if I'm going to hold stablecoins overnight anyway, I flip it to, instead of from USDC to Tether, I just go to Bitcoin and use that as my base trading account. But it's neither here nor there. It depends on what kind of trading I'm doing. But yeah, guys, do your own research on the stablecoin thing. I'm telling you, I've done only a moderate amount of research myself, and the moderate amount of research I've done has led me to the conclusion that, look, if I'm going to hold stablecoins for more than a couple of days, there's only one, and it's Gemini USD, and that is the only one that I will hold for more than a couple of days, period. I mean, it's USDC. I probably wouldn't be too terribly concerned if I had a modest amount parked somewhere for a couple months. I wouldn't be really that concerned about USDC. It is regulated, but Gemini I feel much better about personally. And Pax, Gus, said Pax. I would agree with Pax as well. It's pretty. I mean, it's backed by gold. It's not as safe as Gemini USD, but it's not terrible to leave your money parked in either. I don't think probably. Yeah, cracking USDC to USD has slippage. Where do you flip them without slippage? So on Gemini, you can flip between USDC and Gemini USD without any slippage. On KuCoin, I think it's probably very small. I've actually gained. I flipped them before and gained. Like I somehow, I don't know. It's just the variation of the stablecoin. I think it's more on the Tether side. But I've gone from Tether to USDC and then back to Tether and ended up with slightly more than I had when I started all that. So don't ask me how that works. It's not enough for me to even compute. Like it's pennies and it just doesn't matter to me. So I don't pay attention to it that much. But I have noticed. I'm like, how the heck? I had an even amount, right? So I want even amount, like a certain amount, say for the sake of analogy, $100. So say I took $100 of US. I've seen it where I've gone from $100 USDT to USDC and back over to USDT, and somehow I have $100.03 or 100.3 Tether. I don't know how that works, but somehow it does. I've done that before. So for the bear market, you don't hold stablecoins. I will, absolutely. Yeah, I'll have my Gemini USD parked on Gemini collecting interest. And if BlockFi gets their stuff straightened out with Texas and New Jersey, then yes, I would have Gemini USD parked on BlockFi. So I'm cool with parking. I split it between those two at least myself. I can't, where I live, Texas resident, I can't use Ledin or Celsius or a bunch of these other ones. So I'm just pretty much all I have is BlockFi. I can't use Celsius for stablecoins, right? So I can only do Bitcoin and Ethereum and stuff like that on Celsius. But for Gemini USD, it's just BlockFi and Gemini, which is more than enough. Assuming BlockFi gets their stuff straightened out with Texas, that's all I'll need for the bear market as far as what I'm going to park in stablecoins, and that's what I would do personally, but not advice. I got a comment here from Nathan. What was encouraging was the recognition of positive innovation and the potential positive impact of current financial system generally, far better than we don't like this, it's not going anywhere. Yeah, I think the smarter of the modern financial engineers understand that the cat is out of the bag on Bitcoin. Now, they can totally wreck the party for DeFi and Ethereum and a bunch of other things. They can completely wreck that party, but the cat's out of the bag on Bitcoin. They're never going to, they can't take the network down, right? It's going to continue to run, and if you own a wallet, it's going to have that balance on it, and they can only make it extremely difficult for you to buy or sell it wherever you happen to live. But all they're going to do is cause, like, the United States is going to be at a real big disadvantage in trying to crack down too much on specifically Bitcoin. This is also why I stay pretty much predominantly invested in Bitcoin, because you never know what can happen overnight. But they can't, if they crack down too hard on Bitcoin, there's going to be a bunch of innovation and industry that leaves, and even people and things like that, right? So they're going to have problems as it becomes more popular with trying to crack it down. But I think like Michael Saylor's comments about the U.S. dollar riding on Bitcoin rails and stable coins. I think that's, to them, that's the smarter play, is how do we regulate DeFi to where it's not too much of a fly in the ointment of the current monetary machine, and how do we allow people to use Bitcoin for what they want to use it for, basically like a store of value and ancillary to gold, but still see the US dollar or other fiat currencies as the thing that they're trying to get, gain more of or get in and out of. Because as soon as people start thinking in terms of how many Satoshis do they have, and as soon as it becomes a thing of, as soon as pop culture flips from saying, I got $1 million or I got whatever, right? And I bought my Lambo for 500,000, right? As soon as people quit thinking in terms of dollars and they all start saying, yeah, I bought this Lambo for 10 million Satoshis, or yeah, I got a whole Bitcoin or whatever it is. As soon as that narrative flips, that's a problem, because that's what gives the dollar power. The nation obviously gives it the power, the fact that we have to pay our taxes in it, but it will significantly weaken its effect, because people aren't going to be, especially the banking cartel, is that people aren't going to be taking loans denominated in U.S. dollars, and if that narrative changes, that's gonna really weaken their position. So anyway, I think that the smart play for them is to, all right, how do we keep the rest of the industry kind of at bay and keep it in a place where it's a good innovation center, pseudo technology, we can collect some nice taxes off of it, but not let it actually compete with the mind share that the U.S. dollar has around the world. I don't know if I'm saying that right, but that's what I think is going on. And I think the SEC would be, and well within their jurisdiction to go after people that are defrauding people and raising money for what should be a securities exchange in the name of crypto. So those are my thoughts. I don't know. I rambled on a bit there, but let's see here. BUSD is safe too. Yeah, I haven't read up too much on it. If you think so, I don't think Binance, the exchange, is safe. So I don't know how much I think that BUSD is safe. That's the problem. Regular PAX or PAX Gold? Are you asking me? Gemini takes USDC. Yeah. I think you can transfer USDC to it. I don't remember if it's just an Ethereum contract or if you can do it via algo today, but yeah, I think it's a USDC. I think USDC is transferred to in and out of Gemini on the Ethereum rails. So the Ethereum smart contract for USDC. So it's a little bit more expensive too. So you got to kind of watch, your gas fees when you're doing those transfers. But yeah, I think it does. Okay, I could see some prominent crypto CEOs getting some subpoenas before too long. I wouldn't be surprised. Best place to trade PAX Gold, BTC, Binance seems biggest. Well, where I live, again, I got kicked off of Binance. That was my primary exchange for years. That's all I really used. So I can't use it anymore. So I am currently split between Gemini is my primary exchange. I use KuCoin for active trading, leverage trading, and active trading because there's a lot more coins in KuCoin available, and they give me leverage and futures and all the tools that I need to do the trading that I want. But if I'm just trading in and out of the majors like Ethereum or Litecoin or whoever, I'll be on Gemini for myself. PAX Gold I think is available in Gemini, but I'd have to pull up the actual exchange, and I don't want to pull up my account live here. Bitcoin's turning over a little bit here. I was just watching to see the long-term reaction as people digest the news. I don't think that his comments are really going to weigh on the market anymore, because I think he's just said what everybody knows. So let me look at the broad markets and see if we just got, if the S&P or anything's rolling. Nah, not really. It's just noise. So we're headed to a little bit of, this is the kind of, I don't know where I came with. Oh, this is that high right there, that week high right there is where we're finding support a little bit, 42.5. I expect us not to hold that personally. The 21 week and the 120. 21 week is showing resistance right now. We're curling over, so it kind of confirmed real short-term resistance. So I would expect one more test of the right around 40K, which is where I have orders placed. We'll see if we get it. This 42.6 might end up being support, so it might just end up just kind of continuing to bounce ping pong around here until it breaks one way or the other. PAX GUSD on Gemini. Okay. All right, guys, I'm going to wrap up. It was fun. Yep, that was a whole lot of nothing, though, really, at the end of the day. So take care.